Oh, hey, happy Wednesday. Hope you're all doing well. Let's dive into an outlook, see what's going on for pound US dollar today. And we'll start on the weekly chart as we typically do, just to kind of monitor what is going on the weekly. As we can see, we are still bearish. Haven't seen a whole lot of action in the market just yet, but as I discussed yesterday, the reason for that is most likely due to the fact that we have the FOMC meeting minutes today, later on, CPI tomorrow, and PPI on Friday. So obviously with news being on the back part of the week, the market's going to wait for that, and so is the volume. So we'll go down to the daily chart, and as we can see, really, again, nothing has really changed. We are still inside this demand zone. Interestingly enough, we talked about yesterday, the probability of an inside bar day was roughly 12%. And as we can see, we did actually get an inside bar. So that 12% did come to fruition. So that's interesting to see. And another thing that we can kind of take note of is we have actually broken Monday's low, putting in a new low of the week. Now, typically we tend to see the low of the week on Monday in a bullish week. Obviously, we are still creating what we can call lower lows for now. So, just something to point out. Obviously, if we get unfavorable US dollar news, that could potentially contribute to further upside here on pound US dollar. But as I said, today we have FOMC meeting minutes. It's not the interest rate actual discussion or anything. That's just more or less just something to be aware of. That's, based on the discussions of the meeting, there could be some volatility in the market. It's not something I would maybe avoid trading necessarily, but I'd be mindful of how wide my stop losses are, those sorts of things, just so I'm making good decisions. I typically don't trade after 2 p.m. anyway, so it's not a big deal, but definitely something to take note of. Let's move on to Edgeful, take a look at some reports, and figure out if we can, just kind of get an idea of direction, things like that. We'll start with the opening week range, looking at Monday and Tuesday. And as we can see, we're starting to get an increase of kind of, breaking the opening week's high or the opening week's low. As we can see, because we have our data set to Monday and Tuesday, we've actually broken the opening ranges low. So if I just draw on these ever so slightly, we can see that, there was a 38.46% probability of this happening. It's kind of on both sides, so it's not like one side had an edge. We just happened to be closer to that, and that's where the market was pushing. And as we'll dive into on the M15, at least as of yesterday, supply was still in control. And then we have 26.8% of breaking the high and the low. And then obviously once Wednesday closes, we'll have our actual range set for the entire week. And then you can see that the probabilities kind of stack in favor of really breaking the low and continuing down to the downside. Obviously, if we go to like the 1 year, this will factor in a little bit more of the sentiment of the market. We have been fairly bearish, so it does make sense that this is kind of what's happening. If we look at the previous day's range, we took out, in theory, we took out the previous day's range and even the prior day's low, I should say, not range. So we have about a 71% probability of a bearish day, an 80% probability on a bearish day, factoring in it being Wednesday. We just had the market just continuing to slide down. We had a little bit of an inside bar. We've broken that low, but we've seen a lot of sensitivity. We've seen demand, trying to step back into the markets. So we'll just have to see what that, kind of brings in. But obviously, if we go down to the 4-hour chart, we can see that we had obvious bullish movement, which we've seen on the daily chart, this bullish impulsive lag, because we've basically just been trading these breaks, create a higher high, we retrace, create a higher high. And, the expectation is this is what we'll see, at least to get into this weekly supply level. Sorry, I had to cough. So that's kind of what we're looking at, which is why, looking for longs from here when we get the proper order flow confirmations makes a lot of sense. But as we can currently see, we are in this overall 4-hour front leg, just meaning that as it currently stands, we're bearish. We're making lower lows, lower highs, and we are seeing supply taking control. We had a little bit of a supply control up here. Let me move this out of the way. And then just some supply controls kind of here. Obviously we've taken the low, but as we can tell, in this more current price action, we are very corrective. Every time we're breaking a low, we're retracing, breaking lows, retracing. We were moving correctively to the upside yesterday into this level of supply. We had decent momentum, at least until we started to hit the lows, which, we can see that makes a lot of sense because we're in demand. There are going to be willing buyers more than likely in this area for a multitude of reasons. So it stands to reason that, when we start taking out lows, we can get buy-in to continue. So obviously seeing this wick here and then this bullish candle here, if it closes that way, of course, is a pretty bullish sign. So we'll continue to monitor that. And yeah, as it currently stands, where would I be looking for, if we were to switch bullish, what would I really be looking at? I would really be wanting to see this level of supply fail. That gives me a good indication that, at least at the bare minimum, we would come up to this. Obviously, if we start to see demand take control, we start to build that actual front leg, then we should more or less continue to the upside. Because if we go to the daily chart, really the only part that has supply here is kind of more the extreme. But if we look on the daily, we haven't really seen demand fail. Yes, we could argue that this is demand. This little flip failed. But if we kind of go to everything that we kind of know that's in the course, if we have an extreme zone and a decisional zone, and the extreme hasn't really taken structural liquidity, which this leg, if we kind of look at it, has not. The decisional is typically going to be used as liquidity. And in this case, the decisional is a flip. We have supply to the left. Initial reaction, extreme reaction leg failure, which paints out our zone. Price just absolutely obliterates it. Really, we can see, whoops, I'm pressing controls too many times. We do get, does it actually interact? No, it doesn't. Never mind. I thought it did, but it does not. It gets a little hairy in here because obviously you have all these wicks, which is kind of indicative of kind of demand. And obviously if we go down to the 4 hour, we see the demand chain that's kind of happening. We're creating higher highs. Demand is holding. And then we kind of come up here. We sweep this high. We take out external range liquidity. We have supply here, basically creates a flip. Demand's trying to hold. We are failing to take out this high. In theory, you could argue that at this point, supply is starting to take control in the markets. We see a failure of demand, which, we can still look at this extreme, but as we're already kind of starting to see, if I just get rid of all that and stop hitting Control Z too many times, we're already starting to see supply more or less holding. So it's kind of giving us the idea that this low is probably going to fail. It does, obviously. And then we start to see the momentum shift to the downsides. And from there, on the M15, we're able to trade basically any supply respects. And then whether we're using momentum entries from those zone interactions or once we get into these levels of supply going down into the M1 for confirmations to continue looking for shorts. So yeah, that's 4 hour. We'll go down to the M15, just kind of take a look here. Obviously yesterday we were interacting with the extreme of kind of this range, which is that 4 hour zone as well. So in man of day, as we'll notice, we kind of started to react from it, took out this little last point of demand here, which, yeah. And then we started to kind of tap into supply here, continue downwards, tapped into demand. So we are interacting with demand. So we're kind of caught between, this low and this high. But prior to that, we were caught between this high and this low, which is more bearish structure. We see that very corrective price action into that. And then we start to see the market, basically trying to take control again. We were looking at this flip as a potential area to sell, which I noted in my end of day. That's probably not the best place to be looking for sells in here just because we've tapped into demand. So in theory, the better places would be to wait for the extremes. So basically we have our 50-minute zone here. Any shorts that were directly related to it are unconfirmed M15 order flow shifting bearish, obviously, because we haven't seen M15, shift bearish. Then we have, once this zone gets traded into and we start to see that, we have this is more, I should actually preface that and actually this will be counter trend because the order flow on the M15 is still bullish. Once we get here, it's unconfirmed. It becomes confirmed when we continue to move to the downside. We see this flip. That could be a confirmed M15 zone because now we're starting to see the M15 be trading pro order flow, in this case, a supply in control, and it's in line with the 4 hour. We're in a 4 hour bearish front leg. And then, of course, we have this more extreme zone, which is, again, a confirmed pro trend M15 zone. So looking for shorts in here. right at rollover, not a great idea, of course. But, as we can start to see, supply is more or less holding. We kind of get some structural liquidity sweep here. So this would have been a pretty decent POI to be looking for. We also have a structural liquidity sweep here. This creates a bit of a flip. So in theory, you could have looked for sells here. But, obviously we took out the prior low. So that kind of creates a little bit of confusion in kind of the way the analysis is painting out, because obviously you want solid confirmation that what you're looking for is actually coming to fruition. And then when we start to take out objectives, we have no cause for lower prices, if you will, until we start going here, then go, okay, well, we do have some of this down here, but at least in the short term, we don't. So when we see this kind of blast to the upside, the purpose of this, if anything, is to form some sort of demand chain. We could start to see this, take out some liquidity that is the overall supply. But if supply is truly to remain in control, we would still see that move to the downside, which would take all of this newly created liquidity to be taken, and that would fuel a further move to the downside. Now, of course, if this is a sweep of external range liquidity, which is basically all this, suggesting that in theory, all of this was more or less early enticement, and this was just one really big liquidity play. We come up here, and then we start to see, demand taking control, and then we start to blast past all of this, because remember I said that if we start to break above kind of this area of supply, especially if we have strong demand and control, especially on the 4 hour, I'd like to see it more specifically on the 4 hour, then, I would be looking pretty confidently at an order flow shift. Because on the 4 hour, we break below this. None of this is actually structural. We're just kind of breaking lower. We tap into supply. We do break the low because we've tapped into supply. So from a structural perspective, you can argue based on the rules, this pullback has a purpose. This one right here, corrective into supply, took out the low, so it did complete its objective. So obviously, if we kind of look through that lens, in essence, we could even say that if this high breaks, we come into some form of demand and then start to continue, which would then lead into kind of more of this level of supply failing. That would give us a good indication that we are creating that bullish front leg. And as we know, if we're in a bullish front leg, we're creating higher highs and higher lows, and we're seeing demand being respected. We're able to start trading longs with a lot more confidence. Again, once we start interacting with 4 hour demands, we are looking for the M15 to start realigning with that. And then, of course, we'd have our counter unconfirmed and then our confirmed. And then as we continue on, we would still have confirmed, because now we're trading pro trend, pro order flow, pro to the 4 hour trend, and pro order flow on the M15. So that gives us a good edge, of course, to look for trades. And then it's backed, of course, by the higher time frame. We're kind of anticipating that this high should fail, and we should continue that overall bullish market structure. But yeah, that's kind of how I'm seeing pound US dollar. It needs a little bit of development, I think, to definitely look for the longs. But we could still see some more shorts. Just need to wait and see. We'll go back to Edgeful and look at just a couple more reports. I am going to put on the market sessions report. We'll talk about, once again, one of my my favorite reports to kind of take a look at, the Asian range breakouts. So if we're looking at this, we have a fairly bearish range for Tokyo, quite large in comparison to what we're seeing in London so far, nearly 50 pips. So basically what this is suggesting, that if we break and close below this Tokyo range, we have about a 64% chance that the daily candle is also going to close bearish, and that we would see just continued bearish pricing in, obviously London and New York. But what we are seeing right now is we're kind of trapped within the Asian range. So we're seeing kind of more of an inside bar. So if we go to this report and go Tokyo and London, we can see that there is a 2% probability of no break. So in essence, we could anticipate, a break to the upside potentially, or a break to the downsides, even in just New York open to London close. Obviously this is a pretty small probability of this happening. A single break is definitely more what we would anticipate. If we look at Tokyo and London, the market session correlation, basically we're seeing a bearish Tokyo. So we have about a 65% probability that London will also be bearish. And so far, if we just look at the slope of these lines, these are the edge flow indicators, by the way, we can see that Tokyo bearish, London also bearish for now. And then, of course, if we just kind of wrap that up and say, okay, well, if London ends up being bearish, then we have again 69%, 65 for London, but 69% probability that New York will also be bearish, which then creates the idea that we break that Tokyo session range, which we could be inside. There's no 2% probability, as I said, for London, but then we could break the low in New York, and the statistics of the Asian range breakout would still hold true, that 64% probability of being bearish. So yeah, that's kind of how I'm looking at things. Obviously, we talked about the order flow, top-down analysis, the data from Edgeful to give us kind of an idea of what to anticipate when we're looking at kind of this stuff. Another thing that we'll look at just finally is just looking at the high and low by weekday. We're going to go to the weekly candle. Obviously, when we're looking at the weekly, we're in weekly demand. We're anticipating that we should see a bullish candle. And if we look at Wednesday being the low of the week, which is what we currently are, about a 9% probability. Let's go in the past year and just see if that changes. It's about 21% probability. So obviously it is still probable that it could happen, but obviously as we go further in the week, that probability diminishes. And then we would see the high of the week on Friday, as we would expect. Now, of course, if we start to flip it and say, okay, well, if we're trading a bearish candle, because let's face it, momentum is down, we haven't seen demand take control yet, and we're looking at that, the high of the week being on Monday, which it is right here. If I just toss that right there, and of course change it to high of the week, we can see Monday, that's following true, which means we could also anticipate a low of the week being printed on Friday. So, seeing how we close today, if we close much more bearish, especially if we break and close actually below Monday's low, that starts to solidify further downside pressure. But of course, we have the caveats of FOMC minutes, which in essence might not really do much for the market just because it's the meeting. But we have CPI and PPI, CPI being one of the bigger ones that can cause quite a bit of momentum in the market. So, that could definitely skew the data because, of course, data is only as strong as the events that are affecting the market. And we are in interesting times in the fundamentals, the economy, the world, the geopolitical environment, all that sort of good stuff. So, yeah, things to consider. But, that's it for me. I hope you all have an incredible day on and off the charts, and we'll see you inside the Discord. Cheers.